Yeah, it is LISW, and this has been a very busy day and will be a very busy week, I think, for many of you who are attending those events. So it's good to see such a huge crowd here, as ever, at the Capital Link event. My name is Tony Rice. I'm a ship finance partner at HFW. We had a symposium just this morning, actually, in the city, where we asked some leading members of the shipping industry, not necessarily the finance industry, but there was people like Michael Parker and others there, to give us their sort of 5-minute thought leadership comments. And so it was very interesting to hear people like Andy Case, John Denham, Michael Parker, senior guys from BP, V-Ships, MSC, all coming at this from a completely different perspective. And what we're really talking about, and what's good about today, is the strength of the London shipping cluster, and how it's actually getting stronger in some respects, despite the biggest gap we thought this morning. And even people like Michael Parker agreed this, and Andy Case, was the biggest gap in the London shipping cluster is, in fact, finance. Most of the British banks no longer do finance for all the reasons that we all know. We rely upon European banks having offices in London to undertake that work, and we rely upon now all the other sources of capital to provide the vacuum that's been left by the withdrawal of the banks. So it's interesting. It was an interesting discussion, but the things that emerged from that symposium, just for your benefit, it was innovation, technology, decarbonisation, which is being discussed later on, so we can skip all that. Sustainable shipping, Poseidon principles that you all, I think, know about. But what was, I think, really important was that shipping finance in London, and probably also in Northwest Europe, I think is enhanced and complemented by the fact that we have such a huge London shipping cluster covering all other aspects of the industry that we all know about, from insurances, cargo, S&P, chartering, etc., etc., and law, of course, as well. So we have a very good group within London flying the flag for shipping, and we wish it was probably stronger in the area of finance. Okay, quickly onto some, if we have time, for some bios. Introduction of today's panel. Ryan, to my right, I see, Ryan, that you were an engineer for many years. I always notice how many engineers become MBAs. There's obviously a link between engineering and mathematics or finance. It's very impressive anyway, but you also, apart from being a ship and marine engineer, you also have an MBA, following which, a good move by the way, and following which you've been at AVIC Leasing Ship Finance or Ship Leasing Department for 5 years, I think, since 2015.
Yes.
Okay. I think people know Evan, who is next along the table. Evan is the Managing Director and Group Head for CIT. And I think you now trade as CIT, is it Maritime or Maritime Finance, Evan?
Either way.
Either way, okay.
I also have my MBA. Huh?
You've got an MBA too. Christ, I could be left out here. I'm not going to mention MBA again. Anyway, and in that job, you've got a team of underwriting and business development professionals, and you're obviously generating new business as much as you can, and we'll come on to that in a moment. We all know that before CIT, you were, for a relatively short period, in charge of an advisory and finance boutique in Amsterdam. And before that, you were many years at a senior banker at DVB, where I think most of us will know you from. People here also will, of course, know Shreyas from Citibank, one of the long-term London, not American, but London leading banks in shipping who have for many, many years, I think, been a huge supporter of shipping, not just because of Michael Parker being one of the doyens, but I think because the entire team there are very strong at shipping, pretty good at golf too. They're always taking money off me anyway. So it's good to have you, Shreyas. You've been there since 21 years?
Yep.
If I'm counting?
After 2 master's degrees in business. So.
Have you got an MBA too?
2.
Jesus. Right, I'm very reluctant indeed now to come on to Bill, who was with ICBC, and you joined them in 2013, Bill.
That's right.
And you're mainly responsible for the leasing business of the container shipping and dry bulk business. And before that, you were with Maersk.
That's right, yes.
So you had no time to do an MBA.
I did.
You did?
Yeah. I have to.
Right, okay, so we have an extremely clever panel made up of MBAs, other than myself, who was going to try and keep up with them. All right, so let's go on to some questions. Now, normally in this kind of panel, you know, people like me send out questions to people like these guys, and we try and get it organized, but they've been appalling at responding, other than last minute. So you may find that a lot of this is actually, believe it or not, unscripted, and it will come as it comes. And I hope I don't catch any of you cold. There's no plans to actually throw any curveballs. I'll try and avoid the difficult stuff, if I can. Perhaps what I should do is, we're told to look at the fact that banking is no longer the main provider of debt or finance for the shipping industry. It hasn't been for many, many years. We know that. And therefore, many panels since have discussed all over the world who is going to replace the banks, because we have many financiers on panels today talking about what they're doing, where they're coming from, and they're mainly investors. But I think they will not be providing the same kind of volumes that we know the banks did provide, other than I make excuses for the gentleman either end of this panel, because, of course, ship leasing has been a source of huge rivers of money really coming out of Shanghai. So let's talk a little bit about perhaps what what you see your current strategic plan for each of your institutions. And perhaps in that you can mention what kind of lending you're looking to do, the kind of clients you want to work with, and the kind of ships you'll finance and won't finance. Should we start with you, Ryan? Is that okay? Or should we start the far end? Let's start at the far end.
Okay.
Evan.
That's
Evan,
fine.
sorry.
Yeah. So, and already introduced and Bill from ICBC Leasing. So ICBC Leasing will be in the shipping finance and about 11 years. So we start from zero. Right now, about $30 billion and shipping portfolio. It's always double-digit growth every year. So you talk about the target, maybe we aim at maybe 20 billion and in next 3 or 4 years. So in terms of our customers, 90% customers is global customers, and the most come from Europe. That's why we come to London, because it still be the financial for shipping finance center, also the shipping center as well. And American customers, also some of the Asian customers. And we cover most of the, I would say, different segmentation: the container, gas, dry bulk, also the NG, and we also cover unfortunately and some of the offshore. So maybe this is not the right time to talk about these things. But still, we have some portfolio in our the big portfolio. So that's why we have So I would say, some people will think about in general the China leasing house very aggressively in the past 4 or 5 years, because all China leasing house and grow rapidly and again the two-digit growth, and because we belong to the bank, so fundamentally we still kind of the bank behavior by Chinese bank. So we are it's only because of regulation requirement that we have done well the leasing structure, not by the banking structure. So I can't 100% agree with Tony about the banks will be withdrawn from the shipping finance. Just alternatively, especially from China perspective, the Chinese bank take it a different way, continue to support shipping finance, but taking the leasing structure because that's the Chinese regulation requirement to do so. So I would say we still very positive for the shipping finance, especially from banking perspective, and maybe just from the little smaller compared with before from the Asian, well, from European bank to the Asian bank, because especially from Chinese bank, because right now most of the Chinese bank have their vehicle in leasing to do the shipping finance. It's become more and more important role in the Chinese bank right now. So just very quick introduction.
Okay, thanks. Shreyas, what's the story at Citi these days?
Yes, I mean, listening to Bill, it just stands out how different an organization Citi is from Bill's. But in one respect, we are very similar in that regulators call the shots. So for Citi, we have been in shipping for many, many decades now. We pioneered a number of structures around, for example, financing against charters back in the 60s under Walter Wriston. Even before then, we financed the Panama Canal and such infrastructure projects which were very important for shipping. So it has a storied history within the firm, and we have a team around the world that delivers to clients who are in container shipping, logistics, LNG, bulk of all sorts, and now we also look at the fundamental question you asked: is bank lending being replaced? Well, it works to our strength because if you look at Citi and you look at private banking, investment banking, corporate banking, cash management, derivatives, hedging, commodities hedging, all of that stuff, it goes to addressing client needs. And if the client need is to connect with alternative lenders, whether it is to connect with insurance companies, to write protection for loans, whether it's pension funds, arranging direct financing through pension funds, our markets division does that, our banking division does that. So we are there to connect people with capital and then to manage those funds for them in the most sensible and most coherent way worldwide. So for us, it's very important that the clients we deal with are global, they're sophisticated, because that's the machine we've built. We are in over 100 countries, and the client that uses us the most is the one that is dearest and cherished to our hearts. So that's the philosophy that has been in place for a long time, and that continues to be so.
Mm. And you also get involved, I think, from what we read in quite interesting sort of restructuring transactions as well, where you see a role for the bank in replacing some of that debt. I know you were involved in a very large, very well-known transaction last year that we probably, I don't know if it's private or not, but so you look at these opportunities as well as they come along.
Absolutely. Again, it's no different than connecting people with capital, whether it's markets capital or bank capital.
Okay, thanks.
So,
Evan.
So most of you know me from life before CIT, the past year with CIT, and we're starting this very new, strange venture, a traditional senior debt ship finance bank.
Ouch.
Yeah, so all the PE funds and all the owners here need the senior debt. We would like, strange as it would sound, like to have more competition. There is just not enough simple senior debt out there. What do? Restarting the franchise has been around for a while, without any legacy problems, no big losses in the portfolio. So the bank is open to doing new business. This year we've booked so far 10 new clients, 10 new transactions, about 400 million of business, and this is the classic simple senior debt. So commodity assets, dry bulk, container, tankers, gas carriers, 60% loan to value. Let's start with a good ship, a good owner, an operator, and then good corporate structure and good employment are come third and fourth on the list. Et voila.
So going back to basics.
Back to basics. So we heard Andy speaking earlier about some of the private equity coming into debt, and we're part of that. So of our clients, we have 30 clients today. A third of them are the private equity funds, which we're happy to back lever. These are people who have invested equity in the project. They put the most at risk. They're partnering with the good operators, so we will work with those people. We'll work with the traditional owners and also the good corporates. So,
and would it be fair to say that your your sort of pricing in terms of affordability would be a bit better than perhaps some of the new lending platforms that have appeared in the market in the last few years. I don't just mean the newer banks, the smaller newer banks, but M&M and so on, but I mean there are some funds that are establishing their own sort of lending platforms.
Are we cheaper? It's closer to what owners are used to, but it's more than they're happy about. So, yeah, there's not that many new debt funds. You hear a lot of talk about it, but I know Oak Hill is involved. Friends at Australis are involved, but there's not that much. I see Yield Street coming up with a new way to do something. There's not that much money coming in. And what's the price of the new debt funds you see? I don't know, L+5, L+6. Okay, and you go to a traditional lender. I don't know if Hamburg Commercial Bank is writing new business. They say they are, but okay, if it's L+4, it's cheaper than the rest of the capital, but it's at the bottom of the stack. So if you have to add in something on top of the 60%, it adds up.
Okay. Ryan, could you tell us a bit about what you're doing?
Okay. I'm Ryan from AVIC Leasing. I think the bank is the most important resource for ship financing, and the leasing company is get more important and important in the future. Everyone knows the ICBC leasing is the biggest one in China. AVIC Leasing is not so big, but actually we did ship financing more than 10 years. There are 15 vessels in our fleet. We did the domestic market and the overseas market. We choose the good owners, good ship type, and we try to do our best to provide our facility and the good efficient for owners. I think it is very important for us to do.
And do you have, is there a target that you're looking for in terms of portfolio size? Like you're not quite out yet, but, or is there any cap on what you can do in terms of business?
Yeah, in our fleet, you'll find we have bulk carriers, tankers, containers. In the future, we want to do more vessels, especially for tankers and LNG or LPG, like that.
Mm-hmm. Yeah. And of course, we know the differences between banks and leasing and
yes.
how you work. Are you obviously in the same area? Are there any particular vessels that you will not touch?
Actually, we didn't involve in offshore project before. Yeah. That means we are healthy. But for the leasing company, we will try to do the high efficient and more flexibility for the project. In the future, we will provide the lower and lower costs for customers.
Okay, thanks. Right, let's just talk about something else for a moment. Competition. Obviously, each of you look at your competition in different ways, and where you think other sources of ship finance are going to be plugged in the next couple of years. What thoughts do you have on that generally for the industry? Perhaps we'll start with you, Shreyas, and work along. What's your thoughts on that?
Look, I think capital raising is a collaborative effort, frankly. I think no single bank can lift some of the needs of the industry. So I do agree that you're characterizing it as competition, but it's competitive collaboration, if I could put it that way. We do need syndicates still. We do need club structures. Where competition does rear its sort of uglier side is when we compete for derivatives and other complex structures where different banks have different views on how they use capital to allocate to such structures. But I don't think the bank collaboration side is going to go away within shipping anytime soon. We have about a dozen banks that are super active, and they are all knowledgeable about the basics of the industry, as well as very focused on certain advanced parts of, for example, in Norway, you'll have a very, very, very offshore-focused view on shipping. In Greece, it'll be different. In Brazil, it's different, whether it's an offshore production. So we find pockets of excellence everywhere, and we need to address how we can tap those in a profitable way. Overall, competition is now less of an issue because more and more banks are being driven by returns metrics that are being imposed on them by regulators. It's about time. I mean, Citi has always been sadly at the forefront of this discipline, so we sort of painted ourselves out of many markets. We couldn't price things as low as others. But now that's come back. So I think we are in an environment where it is profitable to lend, and I'm glad to hear that Evan thinks in a simple super senior or senior structured stuff is attractive. That's a sign that we are coming back on decent, rational pricing for capital. And in that spirit, I think competition is welcome.
Good, thank you. Evan, you've mentioned the fact there's not enough other banks out there or lenders out there doing what you're looking to do in terms of first mortgage debt. What would you like to see sort of change in the market?
It sounds strange. I'd like to see more senior lenders out there. So in terms of competition, the days of an owner shopping a term sheet, haggling over covenants, it just doesn't exist, as Shreyas was saying. That's governed by regulation, and you have very little flexibility inside the banking institutions. And if you're an owner and you have 2 term sheets, and you're going to talk to me about 25 basis points, take the other term sheet. That's not what drives the deal anymore. So I'd love to see club deals with 3 or 4 banks in them, because you want to keep the industry going. You want the ship owners to be able to finance their fleet at a decent price. Happy to club deal with any of them. I hear everybody talking about debt funds, and other than the ones I mentioned, there's not so much coming in as debt. Bill, thanks to Bill and ICBC, they call it a lease. That has to be structured as a lease, but anything at 65%, maybe up to 70%, is still that senior piece. Okay, you have that borderline moves, but that's a big help to the industry.
Okay. Ryan, in terms of competition for you, I know it's the other leasing companies at the end there, including the big boys like Bill and ICBC, but do you see other Chinese leasing entrants to that market, or do you think it's currently saturated, pretty full?
Yes, there are so many newcomers for the Chinese leasing, and I think the future of the leasing company should try to provide the professional and flexibility and efficient service for the owners. That's yeah.
Okay, let's talk a little bit about some of the things that were raised this morning by ship owners and shipping people. I mentioned earlier on that it was all about innovation and technology, and of course, as ever, in environmental matters. And some banks, we know the leading banks, championed by some leading European banks and others, have signed up to something called the Poseidon Principles. What's your institution's thoughts on environmental safety and issues and environmental progress in shipping? Did you want to start perhaps again from your end on the environment?
Since my boss is the chairman of the steering committee on Poseidon Principles, maybe I should start.
Go ahead then.
This is a formalization of many years of thinking. I don't see it as something spectacularly new. It is putting in a discipline and a framework for thinking about decarbonization and the impact on the planet. I say impact on the planet. Actually, the planet's going to be fine. It's us that's going to be the problem in problems. From the perspective of a lender as a bank, we've always had environmental sort of oversight in terms of policy and stopping projects if they were not fitting in with our overall corporate green/social responsibilities. So I think we formalized it in a niche of the industry, but it's fair to say it's always been part of a responsible corporate focus for us.
I mean, do you think shipping is playing catch-up with perhaps the project finance industry, where these areas, these issues have always been extremely important? With the quota principles, environmental plans, lots of environmental input on the documentation, on the structure, on the CPs, which have, generally speaking, in shipping not really been that important. They have been more so in recent years. Do you think shipping is now, at long last, playing catch-up in this area? And
actually, Tony, I think I've heard the contrary. I've heard that what shipping has achieved with the Poseidon Principles is now a model for many other industries to replicate. And,
Great.
I think it's a testament to the fact that shipping actually, when we sit down together and do something in a focused way, we have the heft within maybe a couple of dozen people to change the industry, and it's being demonstrated. So I'm sure that other industries will take the lead as well. But shipping, I believe, I don't agree that it's catch-up. I believe we're ahead now.
Can I ask you, how do you plan to persuade others, the non-banks, who perhaps aren't subject to the same degree of scrutiny or public criticism that large banks tend to be? How do you plan to get those to come along and voluntarily sign up too, Shreyas? What's the plan there, do you know?
Yeah, maybe I can
Well,
add up.
yeah, I don't know, but I was asking Shreyas because he's got the inside track, you were saying, but Bill, go ahead.
Because I work with the Michael from Citi, try to organize some meetings in Asia, especially in Shanghai, Beijing, get all these Chinese banks, also the China Leasing House, to understand about the principle of the post-colonial agreement, which from fundamentally should be good and for us, but the legal document is like 100 pages. It's hard for our in-house lawyer to really understand what's exactly inside, what's kind of obligation for the Chinese banks, the China Leasing House. That's why we haven't been signed the document yet. But I would say, the principally, we also support this kind of concept very much. One thing I'm personally concerned about, for the futures, and right now there's more ships built with a green engine, for example, like LNG engine. There's a VLCC built with LNG engine. Also, there's more and more dry bulk built with LNG engine. Maybe one day the ship with the scrubber, some kind of, we call the traditional ships, might not get the finance again because it's not green enough. So it's not happen today, but maybe happen in 5 years, in 10 years. But the ship have more than 20 years and age. So that's maybe some kind of concern by today's ship owner, because you cannot get your finance. You have to use your own equity to figure out how can you finance your ship. So that's something maybe happen in the near future, based on the suggestion from the the post-colonial principle. How can we make the shipping industry more greener? That's maybe some concern we need to think about that way.
Okay, thanks. Well, Evan, I guess CITL.
Yes, CIT is very conscious of that. My boss isn't aware of the full impact shipping has on that. But in a way, being one of the few players left, it's easier on us you have a choice between clients. You can pick a client that's compliant, and this would apply to your debt fund question. If you have a choice between a client that is got 100 port state detentions and you don't know how they're going to scrap a ship and you don't trust how they're discharging ballast water, versus the one who's investing in scrubbers and doing all those correct things, well, then it becomes an easy choice to pick one project to work on. So out of self-interest.
Okay. Ryan, did you want to add anything to that?
Yeah, I think the new regulation of IMO and the technical side can help the industry move forward, such as the ballast water treatment scrubber and the new type engine with the Tier 3. Yeah, it's provided the safer and the element friendly and more efficient for the industry, and also it provide more chance for our financing units. You know, if the ship owners go to China or Japan for new building, they always like to ask the package solution. At that time, we can provide our financing for them.
Okay, thank you. Let's just talk about what you're looking to do in 2020 and the kind. Do we have time? We've got no time. Is that what you're saying? What, no more questions? Well, it's not okay with them. No one asked them.
It's okay.
Okay, I think we're out of time, seriously. No problem. I guess you're behind, so thank you. Thank you very much for members of the panel for answering those questions.
Thank you so much.
This is joking.